Hey everyone, I'm Charting Man Dan, trader and technical analyst for the last 13 years. In this video, we're going to check in on the markets. The bears still have short-term control. We had some losses of key support levels and then back tests of those levels as resistance for some great entries. We've got CPI tomorrow. We'll see how the charts are positioned heading into this fundamental event. So checking back in on the potential 4-hour falling wedges from yesterday, we got a bit over resistance overnight, but it was just a lower high, so certainly nothing to be acting on. And then we came down, broke the low of yesterday with zero follow through. So still has the characteristics of a falling wedge on the S&P 500, but CPI tomorrow is going to determine things. And we've been in a period here the last 4 or 5 months where every event that we went into, whether it was CPI or something else, the bears needed help. Now it is the bulls that need help. Granted, it's just on the short term. We're not going to forget that the weekly charts are still very healthy. And again, I favor continuation as long as weekly EMA 12 is support. If we lose it, then we create the space for a potential weekly lower high. And just as an example, we compare that to Microsoft. Microsoft, because of earnings and the bear follow through, lost weekly EMA 12. There's a good bit of space for a weekly lower high to be the result of the next bounce. Knowing that we must confirm a weekly downtrend if bigger picture monthly consolidation is going to follow through. And so we could say that, Microsoft can bounce 10% and still form a weekly lower high. So that's why we're watching very closely on SPY and QQQ or futures, same thing. Do we hold weekly EMA 12 favoring continuation and an all-time high test, or do we lose it and then favor a weekly lower high as the most likely result of the next bounce? So keeping an eye on that 4-hour falling wedge, the NASDAQ had a bit more of a convincing bear break. This is one of those scenarios where falling wedges and trend lines are a bit subjective. For example, I could just do this, and we still got a bunch of touches, 1, 2, 3, 4, 5, and still trading within this range. But again, it's just dependent on CPI at this point. And it's been a really good hourly downtrend guide on these ETFs. The top of the bounce on Wednesday, or Monday, I should say. Lower low, lower high, lower low. And just want to speak, came across a tweet on Twitter. Don't need to call anybody out, but essentially they were saying, so you're meaning to tell me that we broke this level, but then didn't reject from it, but then today we dumped with no news, and you're trying to tell me this isn't a fraud. And my response to that is, don't fall into the victim mindset. It's a clear downtrend. It's a lower high, lower low pattern. There's no real fake outs going on here. Just because you don't understand it doesn't mean it's a fraud. If you just say it's a fraud, that's removing all personal responsibility from yourself and saying it's not me that's having an issue, it's the market, and it's always you. The market is going to do what it's going to do. It's always us that need to make adjustments. So, nice hourly lower high. Very similar the past 3 days. The past 3 days, we start with a dump on the morning. Here's Monday. And then we bottom before Europe closes. The European markets close, not before, right as they close, pretty much. Before noon Eastern. And then we bounced all afternoon. Dog coming in hot. And then yesterday, dump all morning. Look when we bottom, right before noon, bounce all afternoon. Today, big dump all morning. Bottom right before noon, and shout out to Mr. F in the chat room highlighting it, saying European close coming, watch for those reversals, and then a big bounce. And all into the afternoon, the question was, okay, this is the exact same thing of the last 3 days. Is it going to be different this time, or are the bulls going to run out the clock on the bounce into the close? And at 3 p.m., we saw something different. Right before 3 p.m., and right here we can say, all right, this is different. Our hourly lower high is potentially shaping up, and then we confirm the 5-minute downtrend, and it's very different. So the lower highs have been set at different points in time. One lower high was set overnight, the other lower high was set yesterday morning, and now this lower high was set this afternoon. So just a consistent downtrend. Great volatility in both directions. Some really nice bouncers. And NVDA showing us that. Remember yesterday talking about previous support, now resistance on NVDA. So the previous support level, look at all this action between 443 and 445. And then we lost it. And then yesterday there was a day trade shorting the back test of that level. Wasn't a ton of follow through off the rejection, but almost 1%. and then we just putted around that level sideways, and look where we opened. Right under it, collapse, 15-minute bear flag, huge flush, and then a monster bounce as well. I mean, bigger dump, but 3% on the bounce after a 5% drop or whatever it was. Just beautiful opportunity in both directions. And so NVDA is continuing its daily downtrend, lower highs and lower lows, and here we are knocking on the door of weekly EMA 12, and we are shaping up monthly consolidation. Monthly stair-step pattern, a higher low every single month, all year essentially. And whether we break or not this month, I'm looking for monthly consolidations on names like NVDA and Meta and a number of other places. And today there was relative weakness in AI stocks, and Meta is included in that. And the reason was SMCI earnings, huge dump. So why did we have such a huge dump? Well, we've only been going up. This is the only AI chart that, looked like a bubble. Look at the monthly chart. I mean, if you go straight up 350% in blue sky breakout, if you have a weekly stair-step pattern where you haven't established any support, it's easy to drop hard. And so, in my opinion, the AI tops have been set for a while because this SMCI drop led to significant weakness in not only NVDA, but look at AI now. AI, over the last handful of days, is down 26%. And we're knocking on the door of weekly support. And if we break 31.57, we confirm a weekly downtrend. And we will be at the lowest levels in 3+ months if that were to happen. PLTR sold off very hard today. And again, from the top here, we're down 25% essentially in just a week and a half of trading. And today we ended up dropping 11%. So the tops are in. And now it's just a question of, can we form, weekly higher lows? Do we have to see monthly consolidation? So just have that mindset. That's at least my mindset approaching AI now. All right? Great runs, multiple months of great bull opportunity. The tops are in for now, and that means we're going to chop around for a while. There's going to be opportunity in both directions, but the bears have short-term control. We're going to look for daily bounces sooner rather than later, but the results of those daily bounces will be lower highs. And growth names also led the way down. The big tech, AI, and growth all in a grouping led the way down today. So on the theme of NVDA, previous support acting as resistance, and let's just go to NVDA, next support zone that we're looking at. I'm looking down at 416 and 413 as a couple levels, and weekly EMA 12, which is right around there, 14s. But Meta, so Meta was a great example today, finally confirming the daily downtrend. I've been waiting for this for 3 days. Just after this after this candle, it's just all right. Let's confirm the downtrend into the gap fill, and the bulls just held on, and then we finally rolled over today, and it was another example of a support level that you could see from space. I mean, look at this level at, if we're going with just go to regular trading hours to simplify it, 309.93. And then we bounced off 310.20, 310.46, 310.11. It's just a support zone, a very clear support zone. And this is, ChartGuys Lamont talks about volume profile all the time, and that's his style of trading. And I don't use volume profile, but this is where our styles align, where clearly there's a volume shelf at that level. And look at this perfect back test. And again, it's easy in hindsight, but it's also easy to recognize in advance as well, just going over today's chat room action. Let's see. So let's just do a little timeline here. There's one more. Which one am I missing? All right, so we started with at 128. Speaking of which, I was probably talking about NVDA previous whatever. Speaking of which, keep an eye on Meta hourly lower high under 410. Why 410? That's our wall of previous support, now resistance. Okay. Then 45 minutes later, scouting Meta, previous support, now resistance, 310 short zone. So just patiently waiting. Right before that, I had said, to prevent from over trading, I'm giving myself one chance for the hourly lower high shorts. And that's because the last 2 days, I made an attempt at hourly lower high shorts, and we just kept grinding higher. So I don't want to, try and short if we're just going to keep grinding higher and the bulls are going to run out the clock. So I said, I'm giving myself one chance. And do that with yourself. If you're over trading, put yourself in timeout and be very strict because it makes you very picky. I then said, all right, I can't just dilly-dally and say, all right, this is a good chance to try. I have to, give it one go. And so then in the meta short at 222, that entry was 309.33. And that was the top. We also had QQQ hitting 5-minute overbought for the first time after the dump. That was a 5-minute reverse back burner scouting the hourly lower high. QQQ was rejecting from hourly EMA 12. So it's a confluence of signals. Meta rejecting from an hourly EMA 12. And my entry was right around here. And then really nice follow through. Just taking profit into the end of the day and exiting the position before CPI reaction tomorrow. So keep an eye out on previous support levels. Look at Netflix. Look at Netflix on the daily and look at this support zone. 426.56, 427.19, 426.27, 427.59. We have bounced off of this level a bunch of times the last week. If it breaks, our weekly lower high is set, and bears will try and confirm a weekly downtrend for a 4-month lower high to be shaping up. Got to break that support level and then got to reject from it on any back tests. And it's in play tomorrow. Should have scouted that lower high as well. I wouldn't have swung it anyway with CPI. So let's see if Netflix follows suit with breaking daily support, similar to what Meta did today. Tesla. Bearish, hourly lower high into the end of the day. Week close at the low and just continuing the downtrend. We open. So here's an example. When do I use regular trading hours versus pre-market? Generally, I'm using regular trading hours. But this morning on the live stream, was talking about this pattern, this tightening equilibrium, and saying, be cautious because even if we break the high of yesterday, which is a daily inside bar, even if we break 250.92, if we do not break 252.48, it's still just an hourly tightening range. So don't be faked out by the break of the high of yesterday. We've got to follow through and break that level as well. And we failed, and so we rejected from hourly resistance and dropped down and broke hourly support. And didn't break 242 by a lot, but it's still a clear bear break. And we could also see on the morning live stream, Meta and NVDA had relative weakness. And so as I was doing the morning live stream, I was saying, if the QQQ bears show up after the open, the two names to focus on are NVDA and Meta. And I'm finding more and more how many times pre-market relative strength and relative weakness does play out through the morning. And so you can look at pre-market. How do you determine relative strength and relative weakness? Well, just look at where they stand compared to the close. QQQ pre-market was higher than where we closed. And at that point, we were seeing, I'm not going to be able to pinpoint it, but there were signs that there was some relative weakness in these names, enough to highlight it. So again, I don't know if QQQ is going to go up or down when the bell rings. I can determine most likely scenarios. We knew we had to confirm an hourly trend change, but I can pick a couple relative bulls, a couple relative bears, and then just be ready for, okay, if the NASDAQ shows me weakness, I look to the bears. If it shows me strength, I look to the bulls. Healthcare, still following through. It was Eli Lilly bullish earnings reaction, and we got plenty of space for a daily higher low to try and form here. And so there is still rotation going on. We're not having all major sectors dropping together at this point. And we'll see, can the bulls confirm the daily uptrend after next consolidation to try and set this weekly higher low? Technically, the weekly higher low is set. We just don't have confidence without that daily uptrend. Financial sector. So bear break. Nope, I take that back. So we had a bull break over the high of yesterday, but a weak close. So still in consolidation mode overall. Definitely a bit choppy. And KRE also still a bit unsure. Watching the weekly consolidation here, it's still a potential bull flag, but overall, again, still in consolidation mode. IWM, daily inside bar, watching for a weekly higher low, watching EMA 12, but the bears still have short-term control. And growth names sold off hard again. ARKK, top is in for a while. Monthly consolidation is on the verge of taking place. So 53.86 was a key longer-term level. We topped out at 51.33. And there is space now for, we can bounce 10% and just form a weekly lower high. So I was watching for a potential re-entry in ARKK after I stopped out, but I'm not interested at the moment. We're in a bit of free fall as the market is saying risk off. And that's why AI is selling off, growth is selling off. And one name to keep an eye on for the bulls, CCJ, still looks great. We're knocking on the door of decade plus highs again. Weekly EMA 12 is our guide for full bull control. We did double top today at 34.51, but bearish earnings reaction, bulls bought the dip, higher low. So let's see if the CCJ bulls can keep control. Talked about AI. Crypto stocks, some nice bounce follow through, but Bitcoin consolidated today, and so they are pulling back a bit. Riot has earnings after hours. Not yet, it doesn't look like. Coin is the lead bear out of the three. Broke the low of yesterday, still weak overall. So trying to set weekly higher lows, but not convincingly doing so. TLRY daily inside bar, the bears defended high of yesterday resistance first thing, and it became clear after about 5 minutes of trading that, we have to break 308. Nope. Quick drop of 5%. So if the daily inside bar breaks bear, we're going to look for a daily higher low, and we'll watch for hourly oversold conditions, but bulls losing a little bit of that short squeeze momentum, at least for the moment. The dollar is tightening up. CPI tomorrow is going to have us either break to a higher high and keep the daily uptrend going, or lose the daily uptrend by breaking support, shaping up that weekly lower high. But the bulls are still hanging on, which means the metals are still weak. Gold dropping with follow through. Silver has been in free fall. So again, I was talking about watch the metals into the end of this year, but that is shifting a good bit over the last couple of weeks. And the dollar has helped from getting overly aggressive as a bull. And we know that the dollar would have to drop a weekly lower high to lower lows if the metals are going to be back on the menu for a potential gold all-time high. But again, the last 2 weeks have significantly shifted probabilities. Oil still all bulls. Nice save off EMA 12 into continuation. Again, highest level in many months. 4-month higher low right off EMA 12. Same as SPY. 4-month higher low right off EMA 12. I love these EMA 12 guides. Now the question, does oil head back to 96.50? Or does it set a lower high and tighten up for a long time? And for the sake of inflation, certainly don't want to see oil hit new highs. Natural gas. Again, this is just a perfect example of why, technically speaking, I do not like natural gas. Bear break, bull break, bear break, 20% bounce. Bit of a megaphone type of pattern, but just choppy. And so we now are at the highest level in 5.5 months. Bulls need to break 3027, which we tested today but didn't break. If we get over that level, we're at the highest level in 8 months, and that would certainly help the energy sector if both natural gas and oil are at 8-month highs. And the energy sector is one of the stronger sectors right now. Most sectors are consolidating on the weekly, and energy is hitting higher highs. All right. Hope you're well. Do good things. We'll see what CPI gives us.